Hi, everyone. This is Charles Rennick. I'm honored to be featured on the #1 podcast this week, where Tim and Rachel review my bestseller, All the President's Taxes. I hope you enjoy.
All right, so you want to talk taxes, huh? Specifically, presidential taxes. We're taking a deep dive into all the president's taxes. We're going to unpack some pretty interesting strategies from Presidents Nixon, Carter, Biden, and Trump. And get this, the book starts off with a bang, talking about the Whiskey Rebellion.
Yeah, it's a wild story. Back in 1791, you had American distillers who basically revolted against a tax on whiskey. Can you imagine? Burning down tax collectors' houses, militias marching, all because of a tax on whiskey?
Wow, that's intense. It really puts things in perspective how much taxes have always been a hot-button issue in America. But what does this have to do with presidents?
Well, it shows how important it is to understand the tax code. Just like those distillers back then, we can all legally minimize our tax burden if we know how. And presidents, let me tell you, they're masters at this. The whole point of the book is that it's not about getting away with something, it's about knowing the system.
So it's about being smart with your money, not sneaky. But how did America's tax system even become so complex? It seems like a long way from whiskey taxes to, well, whatever it is we have now.
Oh, absolutely. It's a long and complicated history. But it all started with the Constitution, right? The founding fathers, they knew the government needed money. So they established a system of taxation, but they wanted to make it fair. They decided that direct taxes should be proportional to each state's population.
That makes sense. So when did this whole income tax thing get added to the mix?
That came later. After the Civil War, actually. The war was expensive, and the government desperately needed a new way to raise revenue. And that's when the income tax was born, but it wasn't without controversy. See, the Constitution also has this thing called the Apportionment Clause, which was meant to make sure states were represented fairly based on population.
I see where you're going with this. How do you apply that fairly when it comes to income taxes and different levels of wealth?
Exactly. Wealthier states, smaller populations. It got really complicated really quickly. It created a real clash between the old way of thinking about taxes and this new national income tax, and it actually led to some serious legal challenges. You might be surprised to learn that in 1895, the Supreme Court said, nope, the income tax is unconstitutional. They struck it down because of this very issue.
Wow. I had no idea. So how on earth did we end up with the income tax we have today?
Well, it took a constitutional amendment. In 1913, the 16th Amendment gave Congress the power to collect income taxes without being restricted by that whole apportionment issue based on population.
So that's the short version of how we got to the system we have now. But the book says that taxes today are about more than just getting money for the government.
100%. They've become a way to sort of nudge people in certain directions. Take sin taxes, for example. The government puts those on things like tobacco and alcohol to, try to get people to cut back.
Or what about those tax credits you can get for buying an electric vehicle?
Exactly. The government uses taxes to incentivize things they want to see more of, like eco-friendly choices. And get this, understanding these incentives can actually help you save money on your own taxes.
So it's not about cheating the system. It's about knowing how to play the game. But when it comes to presidents, there's always this question of transparency, right? The book talks about how Nixon's tax scandal really changed the game when it comes to how we view presidential finances.
Oh, absolutely. Nixon's case, while definitely overshadowed by Watergate, set a new standard for public scrutiny of presidential tax returns. People want to know if a president is playing by the rules, not just if they're paying the bare minimum.
Yeah, it's about trust, right? We want to know if our leaders are on the up and up. So it's not just about whether they're following the law, it's also about what their finances reveal, about their priorities, potential conflicts of interest. It's about the bigger picture.
Exactly. The book boils it down to 5 key questions the public wants answered by presidential tax returns. Are they a cheater? Conflicts of interest? Paying their fair share, like the average person? Any shady foreign dealings going on? And this is a big one for our deep dive today. What can we learn from their tax strategies?
Okay, so let's get into the good stuff. Let's talk about some specific presidents and their tax strategies. First up, Richard Nixon. He's a prime example of why documentation is so important.
Oh yeah, Nixon's run-ins with the IRS really highlights that even if you're not trying to get away with anything, being messy with your paperwork can really come back to bite you.
It's like they say, the devil is in the details.
Right. And remember, those 5 key questions the public has about presidential taxes. Nixon's lack of meticulous records made people wonder if he was trying to hide something. It raised those red flags for sure.
Makes sense. It's a good reminder for everyone listening. Dot your I's and cross those T's.
Ah.
Okay, next up on our presidential tax journey, we've got Jimmy Carter. Now, this one really surprised me. He was a peanut farmer before becoming president. And the book says he actually paid no federal income taxes 1 year. No taxes at all. How was that even possible?
Yeah, it's a really good illustration of how taxes aren't always just about what's technically legal or not, but also about public perception. Carter was using deductions and credits that were available to farmers, and it brought his tax liability down to zero. But he knew how this could look, even though it was totally above board.
So even though it was legal, he was worried about the optics.
Exactly. He actually ended up voluntarily paying some taxes to sidestep any bad press. It just goes to show that savvy politicians understand that even appearing not to pay their fair share can become a problem.
Very interesting point. Okay, moving on to John Kerry. The book mentions his married filing separately status, which I have to admit I don't really understand.
So this is where understanding the ins and outs of different tax elections really matters. Married filing separately is a completely legal status, but in Kerry's case, it raised some eyebrows because it allowed him to keep his wife's wealth. She was heir to the Heinz ketchup fortune, by the way, separate from his reported income.
So it's all about how things look on paper, even if it's technically legal.
Right. Different filing statuses can have different tax implications, but they can also send different messages about your finances.
Yeah.
It's something to keep in mind when you're looking at your own options.
Okay, that makes sense. Now let's talk Donald Trump. His taxes have been shrouded in so much mystery, but we do have some information from those 2005 returns.
Right. The book digs into those returns and finds a couple of interesting things. First, even though he's a businessman, he actually paid a hefty sum in taxes that year. $38 million.
Wow, $38 million.
Yeah, and it's a big chunk of that was thanks to the alternative minimum tax, or AMT for short.
AMT, what is that exactly?
Basically, you've got all these deductions, right? And these deductions lower your tax bill.
Right.
But then the AMT comes in and says, hold on a minute, even with all those deductions, you're still a high earner, so you have to pay a minimum amount in taxes. It's meant to ensure that wealthy people, corporations, they pay their fair share, even with lots of write-offs.
So it's kind of like a safety net for the government.
Exactly. And it's something to keep in mind as your income grows. You might be surprised to find yourself dealing with the AMT later on.
Good to know. Now, back to Trump. The book also talks about his business expense strategy. What's that all about?
Well, he's known for being, well, let's just say creative with his business expense deductions. The book gives some pretty interesting examples. $70,000 on haircuts, lavish trips. He even tried to write off the branding on, well, pretty much everything.
Okay, hold on. I need to find a stylist because that's some expensive hairspray. But seriously, is that even allowed?
Well, here's the thing. Those deductions, while they might seem a little out there, they were likely legitimate because he had detailed documentation to back them up.
Documentation again. So even if your deductions seem a little iffy, they can be okay if you've got the receipts to prove them.
Right, but you have to be careful. The IRS has rules about what actually qualifies as a business expense. It has to be ordinary and necessary for your business. That's key.
So what does that mean for the average person? Like, can I write off anything I can even remotely relate to my work?
Not quite. It's really important to keep really good records and, maybe think about talking to a tax professional. They can help you figure out what deductions are actually legitimate and what might raise a red flag.
Gotcha. Good record keeping and expert advice are key. The book also mentions that Trump paid family members, like his daughter Ivanka, for business activities. Is that something you can actually do?
You can, but it's a bit of a gray area. The IRS allows you to deduct wages that you pay to family members, but they have to be reasonable for the work they're doing.
So I can't just put my kids on the payroll and call it a day.
Not exactly. You need to be able to show why their salaries are justified. You need a real employer-employee relationship. And of course, document everything. Again, talking to a tax professional is a good idea here.
Good advice. Okay, one last Trump strategy to unpack. The book mentions that he's a big real estate investor, and there are some unique tax advantages there.
Oh, absolutely. Real estate has a lot of tax benefits. One of the biggest is depreciation. It essentially lets you deduct a portion of the cost of the property each year, even though you paid for it all up front.
Wait, so you get to deduct the same expenses more than once?
Well, not the exact same expenses, but you get to spread out the deduction for the property over time. The idea is that buildings wear down, right? And depreciation is supposed to reflect that.
That makes sense. Are there other real estate advantages?
There are, but they can be pretty complicated. The book talks about things like bonus depreciation and cost segregation studies.
Those sound intense. Is that something I need to worry about if I'm not buying up skyscrapers like Trump?
Probably not, but they can be helpful even for regular people investing in real estate.
So no matter how big or small you're thinking, understanding depreciation and all these tax benefits, it can potentially save you some money. So we've seen how presidents have used the tax code to their advantage, but when does smart become, well, not so smart? The book talks about this blurry line between tax avoidance and tax evasion.
Right, and that's where things can get a little dicey. You really have to know what you're doing. Tax avoidance, that's all about using the tax code legally to, keep more of your own money. It's minimizing what you owe. Tax evasion, that's a whole other ballgame. That's straight up illegal. It means you're trying to get away with not paying at all.
Okay, but how do you even tell the difference sometimes? It all seems a little confusing for the average person.
Yeah, I hear you. It can be a pretty fine line. Think of it like this. Tax avoidance, it's like playing a game, right? You know the rules, but you are playing strategically, using deductions, credits, even loopholes, all to lower your taxes, but legally. Tax evasion, that's like cheating at the game, hiding income, making up deductions, or, even sending your money off to some island tax haven to avoid paying.
Okay, so being sneaky is a bad idea. Got it. The book talks about this facts and circumstances thing and how it all depends on your situation. Can you explain what that actually means?
Sure, what's okay for one person might not fly for someone else. Everyone's situation is different. For example, the book uses these hobby loss rules. Let's say you have a day job, you're an accountant or something, but you've got this passion. You're making like handmade candles and selling them online. You love it, but, and here's the thing, you're actually losing money.
I see where you're going with this. The IRS isn't going to be too happy if you're trying to write off those candle losses every year.
Bingo, they are going to look at that and be like, hold up, is this a real business or just a hobby? And if they think it's just a hobby, you can't deduct those losses.
So how do you prove to the IRS that your side hustle is legit, even if it's not making money yet?
Documentation. Write everything down. Keep track of your income and all your expenses, even things like your business plan or your marketing efforts. You've got to be organized. You need to be able to show them that you're treating it like a real business, even if you're not rolling in dough just yet.
So you're saying if I want to be tax savvy, I need to channel my inner Sherlock Holmes.
Exactly. Think of it like you're building a case, just in case the IRS comes knocking. The book calls this creating an audit trail. Basically, you want a paper trail that shows you're playing by the rules. And you know what can help with this? Getting yourself a good CPA.
A CPA, so like a personal tax person.
Exactly. They are your guide. They help you with all the ins and outs of the tax code, making sure you are taking all the deductions and credits you deserve. They make sure all your paperwork is in order. But most importantly, they make sure you're on the right side of the law.
So it's like having someone in your corner who knows how to play the tax game.
Exactly.
Yeah.
Just like presidents have whole teams of experts, we can all use a little help sometimes.
That's great advice. Well, that's our deep dive into presidential taxes. From the history of taxes to those sneaky strategies presidents use, we've covered it all. And hey, hopefully you've learned some tips and tricks to save yourself some money.
Yeah. The more you understand your taxes, the better off you'll be.
So do your research, ask lots of questions, and don't be afraid to get yourself an expert to help out. It could save you a lot of stress in the long run. And hey, who knows, maybe you can even pick up a few tricks from the pros along the way.